Erik Hirsch is the co-CEO of Hamilton Lane. I just asked him, has he got as many leather jackets as Jensen Huang? Apparently not. Erik, good morning to you, sir.
It's one of my shortcomings.
It is definitely,
leather
well, there
jackets.
you go. There's something to address. Look, what an amazingly exciting week for journalists to look at the financial markets, especially technology. Not so much for investors.
I'm glad it's fun for somebody.
Well, yeah, I mean, gosh, it keeps us in business. But look, you specialise in private markets as well. And one thing that is the most obvious thing I'll say today is that whilst public markets, the oscillation and volatility is on display, it is beneath the surface in the same private markets. But is it creating wobbles in valuations in the private markets?
There's no question there'll be some valuation fallout because so much of this is a mark-to-market using public market comparables. So you're going to certainly see some wobbling, to use your word. That said, I think what's happened in the last 2 weeks has sort of shown, frankly, one of the major shortcomings of the public markets. It is a so reactive paint with a broad brush, and there's no room for nuance anymore. I think as we've moved into such an aggressive kind of passive-oriented model trading world, we've lost sort of the stock picking skill set of trying to distinguish between true winners and losers, and instead it has software in the name. That's a huge problem.
I would probably disagree with you, Erik, because on the public markets, I can find valuations from 5 times forward to 200 times forward. Yeah, we know a couple of the names at the top end there as well. Whereas in the private sector, I don't see much nuance in when I see the valuations of SpaceX, when I see the valuations of Anthropic, when I see the valuations of OpenAI, pretty much doubling every 6 to 12 months.
I agree with you there. And I think that is interestingly the part of the market that's not really fueled by private equity. That is the part of the market that right now is getting an enormous amount of hype from follow-on rounds of financing, opening up to retail investors and trying to continue to kind of compound that. I think if you look inside of the private markets, which is, again, most of those companies are tiny, not household names, there you certainly see a wide array of valuations, and I think that's exactly what you would expect. But I think there is a lot more nuance. I think what you're about to start seeing is the private markets are going to weigh in here and start taking a bunch of public companies private again.
I've got to say, I do agree with you on the stock picking side, and we're all coming at it from our own perspective. I spent yesterday trying to look at co-work and how Anthropic's co-work technology would be folded in, and it's really hard to tell unless you get the subscription, you fold it in across your own existing software. You can't really see the capabilities, and I think that's the problem as we saw the wash up last week and the aggressive sell-off in software. Nobody really knew how it was going to hit because they haven't used the technology.
Agree. I mean, look at our own sector. The publicly listed private equity asset managers have gotten absolutely clobbered in the last couple of weeks, despite all of us basically coming through earnings seasons with double-digit growth. Why? There's this sort of ethereal concern over private credit, and now there's the concern of private equity owns a lot of software, and the combo of that has weighed heavily on those stocks, despite, again, double-digit revenue asset management earning growth coming from the huge part of the sector. And yet those macro fears played down. So
here's a question I asked it Friday and we couldn't get a response. So Anthropic is meant to be coming to the markets this year. The IPO well slated. But what you've seen has been destruction across the board in technology over the past week. Does that also impact Anthropic's valuation, even though it was the disruptor on the market that caused the carnage?
I think it's an interesting question because what you don't know right now is the market, I think, mostly is telling us that we expect it to be a total disruptor without being a partner. Whereas if you talk to a lot of the software businesses, they're saying it wasn't like we were oblivious to the fact that Anthropic existed or what they were doing. We're planning on sort of folding in pieces of that. This is the part where I feel like we're a little bit losing the nuance, which is the software business has the customer, has the install, has the trust, and is tied through the infrastructure of, many cases, large corporations who, as we know, don't love to rip a bunch of stuff out. If they can make that existing service offering better using AI tools and overlays, that's probably the better winner, as opposed to we're just going to start from scratch and everything's going to be a brand new AI bot. So is Anthropic going to be a disruptor? In some cases, I believe yes. And in some cases, it's going to be a client. And in some cases, it's going to be a partner.
That's what Jensen Huang was saying.
I'm missing the leather jacket, but we share the other things in common.
No, you look... split a berth. I just want to follow, I think there's an amazing line in your copy. The death of the exit markup, the hidden pop in private equity returns has evaporated. That is quite stark. Can you explain that to us?
So a couple of things. If you look back at the industry over the last couple of decades, what you see is private equity tended to be extremely conservative in their valuation practices. So we'd be holding it here, holding it, and then ultimately they would sell it. And so you'd see a huge spike between the last quarter holding value and the ultimate exit. That has gone away. Wow. Now, one thought is, well, it's gone away because the markets are terrible and everything's bad. I think what it really means is that the industry's gotten a lot better at actually valuing things to value as opposed to sandbagging valuations and then waiting for this big upside surprise.
Yeah.
But it does have ripple effect because in many cases investors were always kind of banking on that upside surprise, the secondary market banking on that upside surprise. It's gone away. I think net it's healthier for the industry. We should be marking to market, not marking to, oh, this is pretty low, and then look at my big surprise to you. So I think generally healthy, but it is a factor.
Great.
And Erik, given the big story from Japan and that election victory and the stonking majority, supermajority the Prime Minister now has, it makes Japan far more interesting to investors than it has for a long time. What effect do you think that's going to have on the private credit markets?
So I think it's going to have a big impact on the private equity market in Japan. So if you look at that country as a sort of GDP and then compare that to just overall private equity volume, high GDP, relatively low private equity volume. Over the last year, you've seen that trade begin to come on, no different than you've seen it in the public markets, where you're starting to see a lot more investment going into that country. Frankly, that victory is telling us very clearly the alignment between Japan and the US is going to get very, very strong around things like manufacturing and sharing of resources. I think you're going to see a lot of US-based private equity firms deploying a lot of capital into Japanese equities through the private sector.
No.
Sorry, Karen.
Erik, before we let you go, there was a story in the FT yesterday talking about the IPO period, that it's been effectively sped up. There's an accelerator push now trying to get this happening in a very small window on the book building days. What does that suggest to you? Does it suggest a sense of nervousness that there's like a louver rather than a bay window for IPOs now?
I think there's a nervousness. I think the window is sort of there. People are not sure how long it's going to last. Part of this, again, is we're in an incredibly volatile U.S. market, politically speaking. And so one more tweet, one more comment, one more whatever, and then the market can continue to turn or shut off. So I think there is going to be a huge rush through what might be a relatively short but open window.
I was just going to put in, but unfortunately, hang on, just give me 2 seconds.
We have time. We can talk about all kinds of other things.
We'll do some leather jacket shopping, yeah.
Exactly.
It was. You know what? I was actually putting it in. And,
he's ordering leathers
okay,
right here.
How many, I put into a well-known search engine, how many leather jackets does Jensen Huang own?
Oof.
Come on, let's all have a guess. You're not allowed to look at my screen, by the way,
Okay, I'm
guys.
not looking, I'm not cheating.
Right.
I would say he wears one basically every time he appears, so maybe...
Has a large collection of his signature
A large
leather
collection,
jackets. One
okay.
source indicate, this is one source.
I'm ready.
2 dozen.
I'm going to go 50.
His wife
I'm going to go
bought
117.
multiple- How many?
117.
Well, apparently, this is one source, okay? Total count 50 to 60 leather jackets.
Oh, well, I was close.
I mean,
That's very good. No, you were on. You said 50. His
for
wife
every-
bought
one for every
multiple
week of
similar
the
jackets
year.
to avoid shopping for him after discovering he only found specific styles comfortable, resulting in consistent, minimalist, and often Tom Ford branded wardrobe. There you go.
but if you're
nice black leather
acknowledging
jacket.
owning that many, it probably means you own at least twice that
But
many.
then there's a, well,
You're bringing your 117 number back into the equation.
well, we don't know. I mean, again, it's a well-known search engine using one source. Erik, you need to get your act together.
I'm going to be back next time with a leather jacket.
I have a very nice black leather jacket, but I wore it once for an evening out, and someone on the tube platform just randomly said, "Oh, I didn't realise they were making a reboot of Grease," and it put me off wearing it ever since.
As well. Erik Hirsch, thank you very much indeed, style guru and also co-CEO of Hamilton Lane.